Hey guys, what's up? Welcome back to another video. In this video, I'm going to be looking into the third quarter earnings results for Occidental Petroleum. And as we can see, this stock is up 130% over the last year. This is the oil company that Warren Buffett has been buying a lot into. And this stock has actually exploded way more than a lot of the other oil companies that I've been looking at over the last year or so. And so I'm just going to figure out what the earnings growth has actually looked like through their financial statements. It's actually been extremely impressive, as you'll see in this video. And then I'm going to figure out the intrinsic value per share for this company to know if this is still a good buying price to buy into Occidental Petroleum from a value investing perspective. And so right here in this article, before we get into that, they pointed out a couple of interesting challenges that Occidental Petroleum might face in the future. For starters, a couple of countries might experience a decrease in energy demands. China, for starters, has a zero COVID policy. And so as a result, with everyone being on lockdown, that's going to decrease the demand for oil in that country. And then the concerns surrounding a general recession in the US, the EU, and the UK are obviously going to decrease the demands for energy in those regions as well. On top of that, if I scroll down here, we can see that President Biden has actually made a plea for oil companies to consider increasing the amount of oil production that they've been producing by about 500,000 barrels per day. And if that were to happen, that might reduce the inflationary effects on the price of oil, because obviously if there's more supply, then there won't be such a bigger demand in relation to the amount of supply of oil. And so that'll actually end up bringing down prices, which could end up being a net negative impact on Occidental Petroleum and a lot of the other oil companies in the industry. And so right here, we can see their balance sheet for the third quarter of 2022 compared to the fourth quarter of 2021. During that time period, their total assets have decreased by about $3 billion. We can see their total liabilities aren't actually listed here, but based on the fact that their total current liabilities decreased a little bit and their total equity increased, we can assume that since their total assets decreased as well, that their total liabilities must have decreased by a pretty substantial margin. But interestingly enough, their total stockholders' equity increased during the same time period that their total assets decreased. So that could be a good sign. We can see that the retained earnings line item here has absolutely exploded from about $4.4 billion to $14.8 billion. So that's massive growth for OXY's retained earnings. Gives them a lot more capital that they could potentially use to reinvest into the company and potentially pay out dividends to shareholders and things like that. Right here, we can see their income statement compared year over year, and we can see that their revenue has increased from $6.8 billion to $9.5 billion. So that's an increase of about 40% on their top line revenue year over year. And then what's even more impressive is we can see right here that their net income increased from only $628 million to $2.5 billion. That is an increase in their net income of 305% year over year. So I think that that's actually the most net income growth that we've seen out of any of the oil companies year over year. So that is very impressive. And then on top of that, we can see that their net income per share, their earnings per share, has increased from 67 cents to $2.74 per share. And so if I go to page 8 here, we can see their cash flow statement for the first 9 months of 2022 compared to 2021. During that time period, their operating cash flow has increased from $7.3 billion to $12.8 billion. So that's obviously a massive increase. And then on top of that, we can see that they've purchased treasury stock coming out to be about $2.4 billion and paid out dividends of about $860 million. So a ton of value returned to shareholders. It's definitely been an extremely good year for Occidental Petroleum. And so right here, we can see the intrinsic value per share for their company based on this discounted cash flow model. Yahoo Finance is estimating that their company is going to grow at about 25% over the next 5 years. They had about $7 billion of free cash flow in 2021, about $20 billion of debt on their balance sheet, and about 908 million shares outstanding, putting their intrinsic value per share to about $230 per share with a 50% margin of safety of $115 per share. And so based on that, Occidental Petroleum is basically trading at well below a 50% margin of safety at $71 per share. So that puts them at a pretty strong buying opportunity if they're able to maintain the growth rates of about 24% over the next 5 years and 12% for the next 5 years after that. But obviously, that's a pretty big question mark because based on the up-and-coming catalysts like the Biden administration potentially making it so that these oil companies have to increase the amount of barrels of oil that they're producing, as well as the not really, we can't really predict what's going to happen with Russia and Ukraine and how that's going to affect oil prices. And on top of that, we might be facing an up and coming recession, and so that'll affect oil prices too. So a lot of question marks as to whether or not Occidental Petroleum will be able to increase their share price and continue this growth rate moving forward, but we'll see how that pans out in the future. On the right hand side here, I did a competitor analysis comparing them to their competitors. Occidental Petroleum's financial ratios aren't that good in relation to the rest of the industry here. We can see they have the worst return on assets, and they're about second last place in terms of net profit margin, right above ExxonMobil, or actually they're in third place because they do have a better net profit margin than ConocoPhillips. But obviously from a financial ratio perspective, it looks like Devon Energy and ConocoPhillips and Chevron are basically doing the best. Occidental Petroleum seems to be lagging behind a little bit. So from a financial ratio perspective, looks like they might not be the buying opportunity, but from an intrinsic value estimate, and if we're comparing them based on their increase in stock price over the last year, looks like OXY is actually doing pretty well, way better, or not way better, but definitely doing a little bit better than some of their competitors in the oil industry. So not really sure what to think of this company. It's a winner for Warren Buffett. He's been buying into it pretty steadily recently, so I'll definitely be keeping my eye on it. Let me know in the comment section down below what you guys think of OXY. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.